I don't trust the recovery. The damage technically by our metrics, which is to say price is one thing, okay? That's what everybody sees. Like Joe Granville said a couple decades ago, everybody believes it, it's probably wrong. Okay, but anyway, we look at momentum of price and we measure it, like, for example, quarterly momentum, which is a fairly long-term measure of the market, where we don't measure day-to-day action. We measure like monthly bars and how are they plotted in their relationship to the ongoing three-quarter moving average. It was clear you were topping late last year. And if you look at price charts of the S&P, you'll see it was just clumping up there. It was just doodling around, staying firm, but it wasn't going anywhere. And in January, the very first week of the year, we had enough breakage in the S&P on our momentum charts to say, okay, that's it. Okay. Well, 2 weeks later, the market made a new high by a couple percent above where we said sell, which is okay. We don't mind being wrong a bit. And it went up, made a new high, and nothing happened. And it rolled back over and started to slowly degrade. January, February. And it wasn't until April that they really got clobbered with the tariff stuff. Okay. But momentum had already blown all of its major multi-year trend-defining structures that it had been building since that 2022 low. The market made a low then and advanced for a couple years. Took it about a year and a half just to get back to its 2022 high. But anyway, and it finally, in 2024, you exceeded the old high that occurred in 2022. And you rolled over there. And when you rolled over slightly in price, we blew momentum structures. It's like looking at the bridge on the River Kwai. Okay, boom. Okay, price didn't have those structures. But then what happened? A bit lag to momentum, like a month or so, we had the implosion. Well, MSA knows that, I think silver's going to blow the hell out of those two highs. First off, as you said, they're irrelevant, really. They're nominal price highs. They were exceptionally brief. If you go back and look at them, there's like thin air. They were up there for a couple of days, and then they dropped hard. So it really isn't like an overhead ceiling. It was an exhaustion. We're in a different world now, fundamentally and technically. And to reference those old highs as some kind of level to clear, fine, if you want to do that, do it. My personal investment strategy right now is that I think silver could easily go to $100, $200 for the next year or so. I'm serious. And gold go a lot higher as well, of course, but silver outpaced gold. But in this particular surge that I think we're on the cusp of triggering, like I said, get up to that 34.90 on momentum, it's going to break out. And you get up to 35, you're back to a triple top. It's a hand of top. Silver never tops, even with double tops, much less triple tops. That's a launch pad. But when you go through that level and touch 36 for all the price chart guys, they know they got a breakout then. I think that next move will likely carry you up into the 60s to 70 zone. I'm not going to be any more precise than that. But I think $50 won't even be a pause point. In other words, I think you're going to get a quantum leap here up out of this history of silver. And in other words, put it somewhere remotely where gold is. Gold's peak in 1980 was $850. Its peak in 2011 was $1,920. Okay, well, gold's gone way beyond those old highs, and silver's still capped below them. That's a joke. I don't reference those old highs as meaningful. It's a number that I suspect that when you take it out, a lot of people will say, gee, I better own some silver. Okay. And frankly, once they gush it for about 10 or 15 bucks, I might take some call profits. But that's what I think is likely to occur over the next handful of months, maybe a quarter or two.
Yeah, great analysis. According to data from the Silver Institute's website, we're in the fifth consecutive year of silver demand outpacing supply. So we're in deficit here for 5 consecutive years or into the fifth year. I know you focus mostly on technical analysis, but are you also watching the supply-demand fundamentals? And what are your thoughts here on this supply deficit?
No, I'm not watching them. I do realize that, but as you said, it's been true for 5 years. Okay. Well, I guess for the last 5 years, silver's risen. Okay, if you stand back and look at it. But no, I think that there's other factors. Yes, first off, the silver versus gold situation is, I think, essentially that chart too, going back about 50 years. If every year you made a note of what was the highest spread reading of silver versus gold, and the way we define the spread is we simply divide silver price into an ounce of gold price, and we get a percent. And you'll find over the last 50 plus years that 21 of those 50 years, silver's at least at some point during the year traded 2% of the price of gold. Well, right now we're 1.01% of the price of gold. So historically we're very low. We've been lower, but this is very low for silver in relation to gold. Everybody knows that. Okay. When we technically analyze whether there's the potential to go back up to that, even just the normal 2%. It's not even asking a lot. You're asking for routine recovery to a normal level. Well, that's a doubling in the current valuation of silver to gold. Are there technicals that indicate to us that spread, analyzing the spread technically, is ready for an upturn and a surge? And we see them. We've not broken through them yet. Right now, silver, like I said, is 1.01. Divide an ounce into an ounce, as of today, as we're talking. Okay. If you get up to 1.1% price of gold, so move up 0.1%, okay, that spread is going to break out on our work over a first level of breakout. And if you ever clear 1.32%, you can make a note of this if you want, 1.32. I think you'll gush up to 2%, meaning just go to the norm. Well, heck, that process involves the doubling of current valuation of silver to gold. Now, whenever silver outperforms gold, it's never in a downtrend on both markets. In other words, when silver outperforms gold, it's because it's going up more than gold. It's never the case that silver outperforms gold because gold goes down more. You know what I mean? So the spread breaking out to the upside is also affirming net price upside in both markets. And I think we're on the cusp of that. And I also sent you a chart of the gold and silver miners versus gold. And that is a very clear spread chart. It goes back to 2020. And why did I go back there? Well, if you'll recall, that surge that occurred from late 2019 to 2020 was not only a price surge for all the metals and the miners, but it was a relative performance surge by the miners, where miners beat the pants off gold during that 6 or so months of that surge into mid-2020. Well, if you go to the peak of that rally, which is what this spread chart shows, you'll see it's a staircasing decline in the relative performance of the gold miners versus gold. There's a structure on that chart. If you treated it as a price chart, which in effect it is, it's price versus price. There's a downtrend structure and there's a horizontal structure, such that right now you're nudging up toward that level. In fact, that chart is as of last week's close. You're stronger than what that chart shows. You're not at the breakout level, but that breakout level is so well definable that when you break through it, expect miners to gush on the upside. Not just in price, but in relative to the gold market, which they often do in bull trends, particularly later in bull trends. So we see both silver and the miners, which have been underperforming gold for the last several years in particular, since that 2020-2021 period. They look ripe to turn up versus gold. And then there's a net price issue on silver too. And you mentioned that. I had a long-term oscillator that I showed. It's a 40-week average oscillator. Now, what is that? That means each week we take the weekly range and we plot it on an oscillator versus where is the 40-week average. 40-week average is about like a 3/4 average. It's about the same duration as a 200-day average. So it's a long-term average. And we want to know, where is this week's range in its relationship to that average? Is it above it or below it? In which case we plot the oscillator. That oscillator has a parallel channel on it that goes back to last May. And if you close this week out, and right now as we're talking, silver's been up to upper 33s. You get to the upper 34s, like 34.90 area again. Remember, it's peaked twice above 35, October of last year and March of this year. You get back up to the high 34s again, that spread's going to, not the spread, that momentum chart's going to break out. Meaning momentum says, I'm going for it. Meaning go for what? A triple top breakout in price. And I'm sure that whenever you go to 36, the price chart guys are going to say, well, I guess we were wrong. It's not a top. That's a triple top breakout. 235 peaks, you go to 36. The point and figure guys will get all excited. I think it's going to happen. I think this rally's for real. You add $1 to about where today's high is, and it is for real. We're going to surge. And that's a net price acceleration sign for silver, which I bet will correspond to a relative performance shift by silver as well.